I'm Emily Chang, and this is Bloomberg Technology on Bloomberg Television and streaming live on Twitter. We are at the Vanity Fair New Establishment Summit in San Francisco, where we're hearing from some of the most influential voices in tech and innovation shaping the future. This hour, we'll be joined by GE Vice Chair Beth Comstock and Discovery Communications CEO David Zaslav, plus some of Silicon Valley's most outspoken venture capitalists, Benchmark Capital's Bill Gurley and Sherpa's Shervin Pishevar, both investors in Uber. Plus, we head to Austin for an exclusive conversation with Dell founder and CEO Michael Dell. But first, to our lead. We begin with GE. The company's made a big push to position itself as a digital industrial company. But it's not hard to find skeptics wondering whether a big industrial conglomerate can hold its own in Silicon Valley. GE Vice Chairman of Business Innovations, Beth Comstock, joins us now here live from the summit, as well as Brad Stone, our global executive editor of tech. Beth, let's start with you. You know, you've been in this vice chair role now for about a year. You were working at GE for a long time before that. But I'm curious, what surprised you most about this new role?
Well, more meetings. That's not the good part of it. But I think the fact that just we are at this very interesting time in the company, and innovation is happening in so many dimensions, and we're trying to keep pace with everything. So I think the fact that we're focused on it is really a great thing.
Emily mentioned the pitch of GE as a digital industrial company. Yeah. How well are you guys doing, here in Silicon Valley in the war for talent and in the marketplace with some of your digital services?
Well, obviously it's early days. We've been at this about 6 years. We declared the industrial internet as part of our future, repositioned ourselves. I think for us it's really that intersection of the physical and the digital, the hardware and the software. And so we need to continue growing the hardware base. At the same time, we're recruiting great software people. We are positioned out in the East Bay here in the San Francisco area, and we're hiring great talent. I think it's a different kind of challenge than people have been hiring for here in Silicon Valley and in the Bay Area. So I think that creates its own kind of momentum. Huge data sets, big challenges with healthcare, energy, transportation. So I think with that comes really a different mission, I think, for some people who are looking for what's next in the software space.
We're at a moment where some people feel we're in a period of technological stagnation, and we're also seeing rockets and self-driving cars. How do you balance, as a big corporation, investing in companies, innovating from within, and acquiring?
Well, I think you have to do, as a big company, you probably have to do all of those things. And I think over the past decade or so, you would have seen us evolve our model where we're continuing to do core innovation. I think often core innovation doesn't get enough attention for what it should. I mean, you have to keep innovating the core to keep going. We've done quite a bit at going into new spaces, renewable energy being one a decade ago with wind energy, now digital for us, and doing a lot more partnerships, partnering with startups. That's what's brought us out here to Silicon Valley, not just investing, but creating new businesses with startups and partnering. So I think you're seeing more and more bigger companies realizing you have to have a portfolio of all of those things.
You also had a partnership with Microsoft over the summer for your Predix operating system. Tell us what that is. I know it's a small part of the business now. What's the vision for it?
Well, Predix is the operating system for our part of the industrial internet. And it has to be built for industrial scale data, the ability to crunch large data sets, analyze all the data analytics, all the storage that has to happen. Not everything's in the cloud, some's on premise. So there are just unique challenges that industrial data brings about. Microsoft, we announced a partnership with them and Azure. We've got a lot of great partners. I think that's one of the things you're seeing a lot with bigger companies is you can't do it all yourself. You have to figure out where's your competitive advantage and where do you partner.
Talk to us a little bit about GE Ventures and how it relates to the rest of the company. Obviously, you oversee innovations, but there's this more specific area, and people here in Silicon Valley are, of course, very curious about it.
Right. Well, we've had our GE Ventures team for about 4 years here. We're in Menlo Park, and we were able to attract some really amazing venture capitalists and entrepreneurs in residence. And I think maybe in the beginning it'd be like, what is GE really going to do here? And it's created really great momentum. And so with ventures, not only do we invest in some startups, but more and more we're partnering with them for commercial applications. For example, creating a drone as a service opportunity that we're developing right now here in Silicon Valley to go and work with railroad customers, for example. We're also incubating new businesses. One we're very excited about called Vitruvian, which is a cell therapy, immunotherapy data play, and it's being incubated here with a partnership with Mayo Clinic. So I think you're seeing more of those models coming from us. We're able to draw from really great entrepreneurs who want to take on these kind of challenges.
And a historic move recently for GE. You moved the headquarters to Boston.
It's a big deal in Boston.
Why Boston, and are you integrating with the local startup community there?
We're integrating in a big way with the local startup community. I think there's a new model, certainly for GE. If you look at us over the past decade, much more global, much more embedded in local markets. And I think this understanding of the ecosystem, we all throw that word around, but it's about partnerships. And so our headquarters, it made sense to have it in a place where we could be part of academic ecosystem, startup, a lot happening in life sciences, advanced manufacturing, robotics in Boston that made it really good for sort of GE's next act in a corporate sense.
So you're required to be a Red Sox fan now?
Yeah, I'm not sure I'm ready to go there, but I think there are quite a few GE Red Sox fans who will wave the flag.
We're poised for potentially a lot of technological disruption that could lead to a lot of societal and political change with the rise of AI and other technologies. Given that we're 3 weeks away from a very big election, how much do you think is at stake here when it comes to innovation, when it comes to entrepreneurship?
I think a lot's at stake really in every country around the world. What do you need for innovation? You need great education systems. You need the right infrastructure, technology, the hardware and the software, and you need less bureaucracy. You need to incent the innovators to go fast and go forward. You need the right kind of financial incentives. And so I think whatever happens out of this election, you want to hope for innovation's sake that those things are put in place. And I'd say a vision really helps too. Where are we trying to go? How do we get everybody focused?
All right, Beth Comstock, General Electric Vice Chair. Great to have you
Thanks,
here.
Emily. Thanks, Brad. Thank you, guys. Thanks for having me.
For joining us. Well, as we were just discussing, the 2016 presidential election is on the mind of everyone here at the Vanity Fair New Establishment Summit. Donald Trump and Hillary Clinton set to battle it out in the desert tonight for the final debate before Election Day. We sat down with Graydon Carter, the editor of Vanity Fair, and asked him why he decided to take such a public stance on Trump. Take a listen.
I think that Donald Trump is not your average candidate. We didn't endorse anybody. We've never endorsed anybody. But I thought that I've had a closer look at him as a journalist than most other people have. And I wanted to write about what I saw in this man. And I think it just has not been a great year for politics. And whatever happens in the election, and I don't think he will get in, but it'll leave a stain on the process.
Brad Stone still with me here. It was interesting in talking about his view on whether the media has become sort of a culprit, a whipping boy in this conversation, and he sort of agreed that it's the media's fault too.
Yeah, no, it's indisputable. Yeah, and Les Moonves was saying actually, nobody kind of took Donald Trump's candidacy seriously last year, and everyone thought he was good for ratings. And of course, everyone's talking about the debate and the election today here at the Vanity Fair New Establishment Summit. But I don't get the sense that anyone's particularly worried about the election.
Really?
I think that there's a lot of interest, but I think the polls have maybe taken care of the concern.
I think people are calmed by the polls, but there's sort of this feeling that if it doesn't happen the way the polls are saying, it could be very dangerous, and therefore we need to.
Everybody wants to watch.
Yes. All right, we'll be right back with more from the Vanity Fair New Establishment Summit. Emily Chang with Brad Stone. Still to come, we will head to Austin for an exclusive interview with Michael Dell, his thoughts on the political climate and whether the economy is really as bad as the candidates claim. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang. One stock we are watching, eBay shares plunging in extended trading. The company forecasting fourth quarter revenue and profit that may miss analyst estimates. eBay has been struggling to expand its online marketplace in an e-commerce industry dominated by Amazon. Tech innovators and influencers are gathered here in San Francisco for the Vanity Fair New Establishment Summit, but also in Austin, Texas, because the annual Dell World Conference is underway, now called Dell EMC World, thanks to the company's $67 billion acquisition this year. Bloomberg's Eric Schatzker sat down with CEO Michael Dell for an exclusive conversation and asked about the topic on everyone's minds this season. What is at stake in this presidential election? Take a listen.
We'll work with whoever is in charge, and I think as we look at this, we're quite focused on some big issues around cybersecurity, trade, competitiveness, those are the things that you would think are important to us, and they are. I think some of the rhetoric that I'm hearing in this election is absolutely ridiculous.
You're referring to what specifically?
Well, if you think about trade, we have a very small percentage of the world population, yet we have a much higher proportion of the global GDP. So as it relates to global trade, America's already won. and we export the things that are driving the world forward. And so to say that we're not going to trade with the rest of the world, this makes no sense at all.
You have been a Republican donor in the past. If the election were held today, and there's almost 20 days to go, who would you vote for?
I will exercise my constitutional right to keep my own ballot private.
But you will be voting.
Thank you. I will be voting.
Good. Everybody should be voting. One frustrating aspect of the post-crisis recovery has been the slow pace of business spending. What do CEOs tell you about why they aren't spending?
I think in some areas we're seeing certainly pretty active spending. This digital transformation is on. It's game on, inside companies. Security, they're very worried about the whole cybersecurity world. Productivity and the tools, we see more and more organizations realizing that if they don't have the best and most modern tools for their workforce isn't going to want to be there.
Yet productivity growth is a huge problem for the economy.
Well, some of it is normalized as two firms both utilize the same tool, right? The productivity gets washed out, and now of course you can have access to more information than the president had 25 years ago for free, right? So there are some big changes that are going on. I do think there is some measure of uncertainty, that's related to the election. I think both political parties have been calling the economy much worse than it really is.
You don't see it that bad?
I don't. I really don't. I think the U.S. economy is in a far better spot than most economies around the world.
Do you share the view that the surge we've seen in public sector debt since the financial crisis, the rise of populism, manifestations like Brexit, for example, demographic and other structural changes mean the economy is stuck in this, call it new normal of 2% GDP growth, or do you have a different view?
I don't really know the answer to that. I do believe that the pace of change is accelerating, and that creates some, kind of problems and harmonic distortion in the sense that can people adapt as quickly in terms of skills and capabilities as the world is changing? Now, if you look at it from the fundamental view of technology, the ingredients, they don't have feelings. They're not waiting for somebody to be ready. The future doesn't care if you're ready. Okay, so we care if you're ready, but it's important to recognize here that there have been some big changes, right? You have this enormous surge of emerging market, workforce that's come in, and then you have all of the automation, productivity, technology that is much more efficient. Manufacturing doesn't require as many people as it used to 10, 20 years ago. So that creates some difficult challenges for society.
That was Michael Dell speaking to our very own Eric Schatzker. Coming up, Discovery Communications' $100 million bet in digital media. We'll talk with CEO David Zaslav about the investment in Group 9. This is Bloomberg. Welcome back to Bloomberg Technology, coming to you live from the Vanity Fair New Establishment Summit in San Francisco. Discovery Communications is investing $100 million in a digital media holding company. Group 9 Media is made up of several millennial-focused brands like Thrillist, Now This, and The Dodo. The investment will let Discovery move beyond its legacy linear television business. And joining me now here, David Zaslav, CEO of Discovery Communications, still with us as well, our global executive editor of tech, Brad Stone. David, thank Thank you so much
Hey,
for
guys.
being here. We'll start
How
with
are
the
you?
summit because you are a sponsor. You've got a big setup, virtual reality setup. You've announced a new initiative to protect tigers. Tell us more about this.
First, we love the Vanity Fair Summit. Graydon Carter is a great curator of all the things that we should be paying attention to, and there's a lot of great people here. It's a platform for us to talk about our VR. We're the leader in virtual reality. We have more content, and our app is reached, we're approaching 100 million people. And so as our content, whether it's Discovery or Animal Planet or Oprah or Science, when our content gets closer to real, we think our content can really shine. We really were able to take advantage of the conversion to HD. And so we think leadership in VR is a big deal. And so we have that on display here. And as you said, we invested last week in a new company that we're excited about. We took our short form video production entity, which is here in Silicon Valley. We contributed that in. That was getting about 500 million streams a month. And we put it together with Thrillist and the Dodo and now this. And now we have an entity that's approaching 4 billion streams a month. We got a great leader in Ben Lair who's going to be running it. But we also have some real stakes in the ground. Not only are we the third or fourth largest player now in short form media, but now this is the leader on Facebook with news. As the number one place that people get news on Facebook. They have a number of Snapchat channels, and they have a great data infrastructure that Ben Lair built at Thrillist. So we think that we're going to be a scale player there. Ben's going to run it. He's terrific, charismatic, energetic CEO. And we own 30% of it, but we do have a right to take control after 2 years. And so we can now focus on supporting Ben to the right and building our core long-form business.
Is there an element of hedging your bets, depending on the future of the linear traditional business, that this is maybe your step forward into the new world?
I wouldn't say it's a hedge. I would just say that we need IP on every platform. There's 7 billion screens, and the old world was you have to be on TV. When it comes to the TVs around the world, we're the number one platform media company. We have about 12 channels in every country in the world. So when it comes to people consuming brands on television, our business is growing and it's quite strong. But as they start to consume content on other platforms, we just need to make sure our IP is on every platform, and we're really trying to make sure we get as much share of audience on each one. And so this Group 9 Ben Lair venture gets us in short form, makes us one of the most meaningful players on Facebook and with Snapchat. But separate from that, we're really working on our IP, not just for TV, but for instance with sports in Europe.
Right.
We have Eurosport, so we're the leader in sports in Europe, and we've been aggregating IP. We have the Olympics for the next decade in Europe. We're the leader with tennis, cycling, winter sports, Olympic sports, and so in the aggregate, we're the number one sports provider in Europe. And we've just launched in the last year a product that's called the Eurosport Player, but it's really sports Netflix. For $8, you get all of our sports IP on every one of your devices.
You mentioned Netflix, which of course has been floating around speculation about it as an acquisition target. I'd love to hear your thoughts on whether we're going to see high-level media consolidation. Of course, we saw CBS, Viacom, Comcast, NBC back in the day. Do you see Disney getting acquisitive? And if one domino falls, what happens to the rest?
Well, first, I think Netflix is a great company, and we love their model. And that's one of the reasons why we're imitating it. I think, the difference is that Netflix spends about $6 billion a year, and their economic model and platform is to get subscribers to pay them $8 or $10 a month. With our sports platform in Europe, our sports Netflix, we have $6 or $7 billion of sports IP over the next several years. We're going to be offering it direct. We do offer it direct to consumer, but our cost of content for that is zero. Because we already make money on Eurosport by using that content. And so we've looked at what Netflix has done. We think not only is it appealing, but the market gives it such a great multiple that if we could take our IP, it starts with sports, But all the IP that we have, whether it's science, animals, discovery, all that IP gets paid for where we get a significant margin on that business. And then if you could aggregate that IP as a second bite direct to consumer. And so we're looking at direct to consumer across the board. To your point of consolidation, so far we think we're big enough. But we did feel the need to really, over the last 4 or 5 years, drive ourselves into a leadership position with sports. With Oprah now, we're the #1 network for African Americans in the U.S. And in Latin America, we're the #1 provider of kids content. And so if you're going to survive, it isn't necessarily size, but you have to be really dominant in these super fan groups, whether it's sports, kids, for us also nonfiction. So I think you're going to keep your eye on the kind of IP that people feel they need to have. And that's what we're going to continue to try and gravitate into.
All right, David Zaslav, we could talk to you about this for hours, but we're running into a commercial break. But that's television, CEO of Discovery Communications. Thank you so much for joining us.
Great.
Up next, our coverage from the Vanity Fair New Establishment Summit continues. We'll sit down with Benchmark Capital's Bill Gurley. And if you like Bloomberg News, check us out on the radio. Check us out on Twitter. We're everywhere. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Let's get a check of first word news. The leaders of Germany, Ukraine, Russia, and France met in Berlin Wednesday for four-way talks aimed at reviving the stalled peace process in eastern Ukraine. The talks were the first time the four have met in over a year. The 2015 Minsk agreement, brokered by Germany and France, has helped end large-scale battles between Ukrainian troops and pro-Russian forces. However, attempts at a political settlement have failed. British consumers are starting to feel Brexit's bite. New data shows real wages rising at the weakest pace since early 2015 as oil prices and the weaker pound stoke inflation. The pressure looks set to intensify. Employment growth is slowing. Some economists are predicting price gains as fast as 3% next year. A police van rammed into protesters today in an anti-U.S. rally at the American Embassy in Manila. There are reports 3 student activists were hospitalized. Protesters are demanding an end to the presence of U.S. troops in the country, and they're backing a call by President Rodrigo Duterte for an independent foreign policy. Super Typhoon Haima slammed into the northeastern Philippines Wednesday. Haima is a Category 5 storm with winds gusting up to 140 miles per hour. Many villages lost power and intense winds tore the roofs off houses. People in the area were urged to move to higher ground. I'm Mark Crumpton. This is Bloomberg. It's just after 6:30 p.m. Wednesday here in New York, 9:30 Thursday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Bit of a mixed picture across the Asia-Pacific today. The NZX has been trading for 90 minutes now and is already off 1/5%. Nikkei futures are looking mixed, but we are expecting modest gains here on the ASX at the open. We'll be keeping an eye on mining stocks when we get underway in a little under 30 minutes' time. Fortescue is out with first quarter production numbers. South 32 out with production numbers, as is Woodside. Rio Tinto, the big miners, already released their third quarter numbers. Iron ore shipments were down 5% on maintenance at port and rail facilities, but metallurgical coal production was 2.1 million tonnes. And metallurgical coal's something of a nice little earner at the moment for the mining companies, with the spot price doubling over the past year. Also in focus again today will be shares in Crown Resorts. The casino operator holds its AGM in Perth in a couple of hours' time. Shareholders are likely to be asking a lot of questions about exactly why the share price stepped off a cliff this week and what's going on with those 18 staff detained in China and what it all means for the high rollers business here in Australia. Also out today, Australian unemployment expected to tick up a little to 5.7%. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. We continue our special coverage now from the Vanity Fair New Establishment Summit in San Francisco, where we've been speaking to some of the most influential names in technology. Uber board member and Silicon Valley heavyweight Bill Gurley came in at number 26 on Vanity Fair's New Establishment list, moving up from last year to this. The influential venture capitalist has made big bets on Uber and Snapchat, to name a few. Joining us now to discuss the state of tech, Benchmark Capital partner Bill Gurley, and still with me, Brad Stone, our global tech editor. Bill, always great to have you here.
Thanks
Congratulations
on
moving up
Appreciate
in the world. We have to start with Uber DD. You know, we're moving from wartime to maybe peacetime here, but it's sort of difficult from the outside to understand how this all is going to work, with Travis as an observer on the DD board and Chung Wei on the Uber board. Can you sort of explain how this plays out in reality?
Well, I don't know that there's a precedent for it, so we'll be finding our way, and some of those meetings are just starting to take place as we speak. I'm fairly optimistic that there'll be multiple points of collaboration. I mean, when you think about things like autonomous cars or mapping technology or routing algorithms, it strikes me that if the companies aren't directly competing in any regions, that there are ways that they can both get benefits from sharing. I think it will depend on, obviously, the evolution of the relationship.
Uber was spending heavily in China, maybe $1 billion or more a year. Where does it redeploy that capital? I mean, I know it'll try to get its economics positive now, but if you're an Uber competitor in India or Southeast Asia, how worried are you, or even here, Lyft in the United States, how worried are you that the eye of Sauron is now on you?
Well, but look, I do think that that's a thing. I think that the global ride-sharing market is one that's attracted a ton of capital, and most of the competitive assaults aren't better features or a new UI. They're discounts. And so it can get sloppy fast. And I happen to be aware that some of our competitors in their fundraising pitches have said, well, Uber's going to worry about getting profitable because they want to go public, and so then we're going to discount and come up their tailpipe. And if that's how they're going to think, then we have to kind of, take our $9 billion war chest and be prepared for battle. And so I think we're in that mindset.
Are you surprised at all that Snapchat is looking at going public earlier than Uber? It's a much younger company. Why is now the right time for Snapchat, but not the right time for Uber?
Well, I mean, I could talk for an hour, which you don't have, about the IPO situation, but I think there's been this really bad meme that's been spread in Silicon Valley about IPOs being bad, and I actually think it's in everyone's worst interest that that's been a thing. And Mark Zuckerberg famously said he should have gone public 2 years earlier because it made him better as a CEO. Evan, is not in the Silicon Valley world. He's outside of this echo chamber, and perhaps that allows him to have a more liberated
So when do your own portfolio companies start to listen to your wisdom
when
on
does
this
Travis
issue?
start to listen to you?
Well, I do think ride sharing's an exceptional business because of the issue that we just talked about. And if all of our competitors are going to say, well, we're going to take advantage of them because they're going to go public, then we're going to have to wait that out to figure that out. And I think while those things are going on, it probably doesn't make sense. But look, we've had a couple of 2 or 3 IPOs here recently. If you talk to the bankers, they say early 17 is got a really strong pipeline coming. So I'm hopeful.
This morning, Chamath was talking about the impact of SoftBank's $100 billion fund to invest in technology. He thought it would tilt the playing field toward entrepreneurs, away from investors. What do you think the impact of that massive fund with the Saudi Arabia Sovereign Wealth Fund is likely to have in the Valley?
Yeah, and that's a long subject also. I disagree with Chamath. I think excessive amounts of capital make it harder to compete, and I think it's negative for the best entrepreneurs because they can raise money in any environment, and if money's relatively free, it just leads to excessive competition, as we've talked about, and it makes it harder to succeed. So I disagree with that point. One of the reasons why I don't think we've seen a widespread reset, we've seen kind of a soft reset. Like, people have gotten a little bit smarter. They're not doing as many dumb things. You're seeing an occasional company go out of business or bankrupt, but nothing wholesale. There's just a tremendous amount of money still available. And a lot of it's coming from Russia, the Middle East, and China. And it wants to diversify into American assets. And this is a large example of that same thing. But, if you were to talk to a realtor in Woodside or Atherton, you'd hear the exact same story, ironically.
So what are the dangerous possibilities here? I mean, is there a reckoning coming? And if so, Where, in what sectors, in what regions?
Well, I do think the problem of excessive capital, I wrote a very long blog post on this, but it can cause the cap chart just to get loaded and loaded and loaded. These unicorns have raised $300, $400, $500 million. The only way to deploy that is to take huge burn rates. And so Copa and Nutanix come public and you open the S1 and they're losing tons of money. And there are going to be very few unicorns that look anything other than that because of this dynamic. So excessive amounts of capital deployed lead to excessive losses, which leads to risk. And if it makes it harder to grow out. And so I think.
And yet Nutanix shares more than doubled on the first
Yeah, but it's
day.
already been shorted. And there's a lot of scarcity in that case. I think until you get post lockup, it's really hard to know. But it's a danger. You talk to any economist, like low global interest rates for 7 or 8 years is going to lead to really wacky things. I'm not a macroeconomic, so it's hard to predict, but it's nutty. It causes nutty things to happen with valuations.
Are there any near-term events that could possibly create a seismic event here and shake up the community?
IPO out of Venice, California, or something like that? Maybe. Yeah. I don't know. That might work. We'll see.
But anything else? I mean, really, what could happen as a result of the influx of cash, the perhaps lack of very compelling ideas or companies that actually should be funded?
One thing that could happen is you could end up in situations where the last dollar standing wins. And so I don't know much about the SoftBank thing. Someone said part of it's debt. You start handing out debt. If people can't repay it, you take over the whole company. And so, someone could theoretically use capital in kind of a bully way, which is not something Silicon Valley's seen before.
Jim Chanos recently called Elon Musk's companies a bunch of science fiction projects gone awry.
Yeah.
I'm curious, would you buy Tesla or SpaceX stock now?
It's interesting because there are signs on both sides that could lead very smart people to either conclusion. So if you've ridden in or driven a Tesla, and my wife has one, it is a remarkable piece of machinery, and they've integrated software in a way that no American or European auto OEM ever has. And so you're like, wow, they really understand doing things differently. At the same time, you look at the losses, the missed production schedules, and this decision to merge with Solar City, and you could take that point of view that was presented here at the conference. And
so where do you shake out?
It's funny. I don't know. I mean, I think I see both sides of that. Luckily, I'm not a public investor, so I'm not forced to make that decision.
You've avoided food delivery since Grubhub, and I know in the past we've talked about it not necessarily being a good business, but why is that? Is it because of Uber Eats? Do you think Uber could take all?
I think any of these, when capital gets widely available, venture capitalists take on more risk. One of the ways they take on more risk is they choose businesses with lower and lower gross margins, and they're just riskier to execute. Most of them are also consumer businesses, and if you discount, you can attract customers. And I think the press misses this a lot because they'll just count customers and say, oh, look, they're doing awesome. But if you're losing money on every transaction, you're not doing awesome. You're giving something away and it's going to end. And I like to remind people that Webvan had the highest NPS score of any company we've ever worked with, right up until it went bankrupt, because you're giving away more value.
Customers love
and these are categories, and ad networks and lending money where excessive capital can lead to these price wars, and things can go downhill
and
quick.
Nobody wins.
That can be an outcome.
All right.
Sirius XM.
Bill Gurley, partner at Benchmark Capital, investor in Uber and many other things. Thank you so much for joining.
Thanks for having me.
Thank you.
And 20-something on the new establishment list.
20-something, yeah.
All right, thanks, Bill. Still to come, we'll catch up with Power Angel investor Shervin Pishevar of Sherpa Capital. More of Bloomberg Technology continues next. This is Bloomberg. Continuing now with a special edition of Bloomberg Technology from the Vanity Fair New Establishment Summit in San Francisco. We're joined now by power investor Shervin Pishevar of Sherpa Capital, known for investments in Uber, Airbnb, Munchery, also co-founder of the Moonshot transportation startup Hyperloop. Also with me, our Bloomberg Executive Editor for Tech, Brad Stone. Shervin, great to have you back here.
Great to be here.
On the show. So let's start with Hyperloop. You just raised a new round of funding. People are so curious about the technology. Talk to us about the timeline and, when we'll actually see this come to fruition.
Absolutely. Well, Friday we announced that Brent Kalnikos, the former CFO of Uber, just joined us full-time to head up all finance for Hyperloop One. And we raised $50 million, and DP World, which owns it's the third largest port operator in the world, just joined our board and was part of the $50 million round. And that is fueling our ability to hit the timeline of doing the full-scale Hyperloop test with cargo in Q1 of 2017. So that's coming really fast.
Now, you did just get through some negative press surrounding a former partner in the business. Are you past that now? And what is Brent, obviously a lot of experience, CFO at Uber. He's not CFO at Hyperloop though. He's a special advisor.
He's chief financial advisor.
Okay, chief financial. Yeah. Explain the distinction. And are you past? Do you feel like the company now is past the difficulties?
Absolutely. We have Rob Lloyd, who is president of Cisco, as our CEO. Josh Geigel, who's my co-founder, and he's president of engineering. He was a top guy at one of the top engineers at SpaceX. He's been leading engineering from the very early days. Was number 2 joining the company. And we had 200 people full-time, mostly engineers, and we're hitting our milestones. So we'll hit the big milestone of the major test. It'll be the first Hyperloop at scale in the world. That'll be in Nevada in Q1. And we're signing deals all over the world. And the leader of Dubai just announced that they want to build Hyperloop with Hyperloop One. And we're signing deals all over the world from Russia, China.
Now, are aspects of the Hyperloop underwater, and how much more expensive is that to build?
We have designs for that. So some of the offshore ports, because we're focusing on ports, will be able to do cargo offshore and also inland. So if you look at Long Beach Port, that's $200 billion of real estate value. And a lot of these port operators like DP World have to spend billions of dollars because they're at full capacity. They have to spend billions of dollars on real estate expanding, and here they don't have to do that anymore.
Let's talk a little bit about Uber, because you were one of the earliest investors in Uber. You saw what it could be before a lot of other people did, and now we are so far into the ride-hailing wars. They've just struck this big deal with DD. It's unclear how it's actually going to work in practice. How do you see ride-sharing market share shaking out globally? Is Uber one of 2 winners, one of 5 in the world? What does this actually look like?
Well, Sherpa Capital invested in Uber China as well. So we've put over $200 million into Uber, including in Uber China. So now we own a piece of DD as well. We think Uber itself, as a standalone company, in our analysis, is looking at 2018 beyond at $40 billion plus gross of revenue. You're looking at a profitable company at that point. It's a major force in the global economy.
So profitable by 2018?
That's my own analysis. But in terms of our belief in the company, we've predicted this before. We think this is a $200 billion plus company. I think DD itself is also within China, is probably going to go from $35 billion to a $100 billion company.
Are you worried about the regulatory obstacles they face in China?
In China? As much as I would have worried about Alibaba, I think DD is in a very good position in China.
So how well did you do on paper in the Uber China investment when you take into account that $35 billion valuation?
Sherpa is very happy with our position in DD because of our investment in Uber China. And we think that the leaders there are incredible, and they're executing at scale, and they will, as I predicted, I think they'll be a major company.
Lyft co-founder John Zimmer was on the show yesterday, and do you think Lyft survives? Do they remain a number 2?
Well, Scott Stanford, my co-founder of Sherpa Capital, called them a sideshow with you guys a couple weeks ago. I agree with him, not just because he's my co-founder and I like him, but he's right in his analysis. I think Lyft is in a very weak and precarious position compared to a very strong Uber and DD on the global side.
one of my colleagues, Eric Newcomer, has been writing about the economics of the food delivery business, and Munchery, one of your portfolio companies, was the topic of one of his stories. And he looked at the sustainability of the business, the potential turnover of the CEO. Do you still believe as much in the vision of Munchery, which cooks its own meals and delivers them, kind of a sort of Amazon model in, I think, about half a dozen cities right now? Do you believe in it as much as you did 2 years ago?
Absolutely. Having people like Ron Burkle join as chairman, having Jeff Hausenbold as one of the most esteemed CEOs join the board,
and potentially the next CEO, but that's not.
He's one of the names in the ring of very, very talented people we're looking at. And if you look at the unit economics of Munchery today, they're very positive. All of the cities are contributing positively to the business. We're now doing ready-to-cook meal kits across the country from one kitchen, similar to Blue Apron. So that's nationally delivered. And we're also now unlocked the ability to deliver from the New York kitchen all the way down to DC the same day because of our chilled model. So the economics are completely
those meals hold
superior.
Up on the Excel?
They do. On the Hyperloop.
The structure of Sherpa is very unique, and I'm curious how it's working out. I mean, the mid-stage fund, for example, have you made any investments from that fund, and when do you expect to? And are you seeing enough innovation out there and good ideas to back?
I mean, one of the things they say is, Silicon Valley is not a physical place anymore. It's an idea, and it's spread virally, and the world is a startup. And so the opportunities to invest in incredible companies, no one could have predicted, as Brad's great story on DD growing to scale in just a couple years from scratch. So these opportunities in China, in India, around the world, are here. And the other thing is the valuations are in terms of the opportunities we're seeing, are much more rational these days. And so that to us is a great opportunity. And in Sherpa Avarice, our mid-stage fund, as you referred to, we've got great investments in companies like Ipsy. We led a $100 million round in that company. That company had only raised $3 million before, and it's throwing off cash. It's doing incredibly well. And we did that investment with TPG.
Really quickly, what do you think Governor Andrew Cuomo in New York does with the Airbnb bill that is now on his desk, which probably will govern the future of Airbnb's business in New York? I know you're an investor in the company.
We're investors in Airbnb. We're big believers in that model. We introduced Jim Messina as a special partner at Sherpa Capital to help Brian and the team there build up their regulatory
prediction.
practice.
Does he sign it or does he veto it?
I can't predict what he's going to do, but we'll see.
Okay.
We'll be watching it, following it. Shervin Pishevar, Sherpa Capital, great to have you here on the show.
Thank you, guys.
Thank you so much for stopping by. All right, we'll be right back with more from the Vanity Fair New Establishment Summit. This is Bloomberg. One stock we are watching, shares of Tesla spiked after CEO Elon Musk tweeted that the company would post information about a product update at 8 p.m. New York time today, followed by a media Q&A. Musk has been secretive about what's coming, only saying that this will be, quote, unexpected by most, and that it's related to the Model 3. Analyst Ben Callow suggested in a note that this might be an energy storage product enhancement or different vehicle class, showing altogether. Coming up, Bloomberg's in-depth coverage of the U.S. presidential debates continues. Mark Halperin and John Heilman kick things off 8:30 p.m. New York time, followed by the debate itself at 9. Afterwards, Bloomberg is live from the Barclays Asia Forum in Singapore, where we'll be speaking exclusively with Barclays CEO Jess Stanley and Allianz Chief Economic Advisor Mohammed El-Arian. That's 11 p.m. Eastern from 11 a.m. in Hong Kong. Too many time zones. That's it. For Bloomberg Technology, tomorrow we'll be joined by Alibaba Group President Mike Evans and Udacity founder Sebastian Thrun. Remember, all episodes of Bloomberg Tech now streaming live on Twitter. Check us out at Bloomberg Tech TV, weekdays 6 p.m. in New York, 3 p.m. in San Francisco.